Since Donald Trump's election win this week, as we've been talking about, the Dow and the S&P 500 have climbed to new records. As markets praise in a Trump presidency, we're taking a look at the innovation landscape with ARK Invest CEO and CIO Cathie Wood. Cathie, thanks for being here. I can't help but noticing the benchmark ARK fund also had a good week. It had its best week in about a year. It's up about 18%, has been on a 6-session winning streak. Obviously everything is up here, but I am curious why you think maybe the landscape, the coming landscape, might be good for your portfolio.
Yes, I think there are a number of reasons. I think that with the new administration, we're going to see a logjam open up here and really let innovation thrive. I think top of mind is regulation. We know that Chairman Gensler, SEC chairman, has been a menace to the world of digital assets and was driving a lot of that innovation into other countries. I think that's going to change. We also think that the FTC commissioner or chairman, Lina Khan, will be going, and that will break the logjam in M&A. I think venture capital has been harmed dramatically in the last few years for lack of liquidity events. Liquidity events, very importantly, involve mergers and acquisitions, and those ground to a halt. Even in mergers or deals where the two companies were not competing with each other, it might have been just tangential. So that's huge. I also think that an environment of tax cutting, offsetting tariff increases, and I don't think the tariff increases are going to be extreme, but I think tax cutting is going to unleash animal spirits. Once again, I'm feeling very much like I did very early in my career in the days of the Reagan administration, when Reagan was facing a huge deficit, and what happened? Even though we saw tax cuts, we grew our way out of it. And maybe I should say because of tax cuts, we grew our way out of it. Deregulation was a big theme back then. And I do believe that President Trump will go back to, if you want to put in a regulation, you have to give me back 2 regulations. And it might even be more extreme than that. In terms of government spending, we have assisting President Trump, Elon Musk, we believe, the Department of Government Efficiency, DOGE, perhaps, an acronym there. And we do think defense spending is going to get a lift. And very importantly, AI is going to be central, and already is, I think, central to beefing up our defenses. We're seeing around the world our artificial intelligence expertise being used.
Right.
And I think that's a big deal. Finally, and I do believe one of the fears people have is inflation because of tariffs. We do not think that tariffs are going to cause inflation, maybe one-off here and there. We think inflation is going to surprise dramatically on the low side of expectations because we think innovation unleashed, so robotics, energy storage, artificial intelligence, blockchain technology, multi-omic sequencing is going to cause a huge burst in productivity. We're already seeing productivity surprises. That is going to lower inflation surprisingly. And the other thing is, while President Trump might want a weak dollar, we think the dollar, just like in the early days of the Reagan administration, is going to be very strong because the returns on invested capital in the United States are going to go up relative to those in the rest of the world. And that's going to attract capital and push the dollar up, which is also anti-inflationary. Commodities are priced in dollars. If the dollar's going up, the pressure on commodity prices will be down. So I think one of the biggest surprises brewing is much lower than expected inflation.
There's a lot to dig into there, Cathie. So listen, I'm just going to pick one thing, and then we'll kind of go through and talk about some of these items. When it comes to M&A, and we're talking specifically about your portfolio, If you think there's going to be an uptick in M&A, do you think that companies in your portfolio will be affected either as targets or as buyers? And who do you think might be most likely to be affected within the companies in which you invest?
Well, we have always said that we thought the big risk to our portfolio was that some of our pure plays would be taken out by conglomerates. I think the biggest category is in what some call the genomics theme, and we're now calling the multiomics theme. ARKG is the flagship there, and it's been hurt tremendously by a couple of things. One, M&A activity stopped, and in that world, M&A helps with price discovery, especially when companies are early stage, as many of ours are, and are not making money. They depend on liquidity events and M&A to set prices, help give investors an idea of what bigger companies think our companies are worth. Now, I hope a lot of them do not get taken out. We want to keep our pure plays, but we think some of them will. That's probably the area most ripe for takeovers.
Cathie, let's talk about Elon Musk. You're a fan, Cathie. You're a believer. You're invested in his companies. He played an important role in this campaign. He bet big, Cathie. He bet right. Would you like to see him have a role in this Trump administration? Or, Cathie, as an investor, would you like to see him actually just not do that and stay focused on running his companies?
I think he will remain focused on his companies. I think he'll play a vitally important role in advising the president in terms of the government efficiency initiative. As he says, and I've always believed, government spending is taxation, and we are bloated right now. We're just overwhelmed with taxation as well. So I think that he's going to be really important in two ways: introducing new technologies and actually cutting out a lot of middlemen in the government, just like he did at Twitter. He laid off 80% of the people, and Twitter's working fine. Maybe the advertising dollars haven't come back yet. I bet that changes. But Twitter itself is thriving, and it's become better under him. And I do think the same thing will happen in government. I don't think he'll cut government employment 80%. But what I do think he will do, just like President Trump is suggesting on regulation, if a person leaves employment in government, my guess is that person will not be replaced, because there are going to be many more productivity enhancing tools introduced in the government sector. So I think that's going to be one of his most important roles. I think he'll also have a tremendous impact on how to incentivize new technologies so that the U.S. continues to pull ahead of the game instead of being held back as we have been in many cases in the last few years. So, and especially in space, going to Mars and so forth. So pretty excited about Elon's role. He's a first principles guy. White sheet of paper, let me think. If we were going to do this all over again, what's the right way to think about what government should look like, just like he did in the auto industry, which is now becoming the autonomous industry. So pretty exciting.
Cathie, I understand you lightened a little bit of your Tesla stake going into Election Day. Talk to us about that decision.
Sure. Tesla is our largest position in the flagship strategy. We cannot buy a stock once it goes over 10% of the portfolio. And typically we let it run to some percentage of the portfolio, at which time we start cutting it back. Because if it sells off, and it is a very volatile stock, we like to have the latitude to buy it. We have let Tesla, you can see, we publish our holdings at the end of every day, run to 15% of the portfolio. It has appreciated 50% more than the rest of our portfolio. And so we have been just cutting it very slightly, thinking that 15% from a risk control point of view is a good sized exposure. As you know, we publish our model and give away our research, and you can see from our Tesla model what our price target is. It's 2,600 within 5 years, and we do think the probability of reaching that price target now has been increased dramatically because, once again, regulation is probably going to be less of a showstopper in the new administration than it would have been in this one. Tesla's cars are about to become, the autonomous cars are about to become safer than human-driven cars. And so I think we're going to see autonomous mobility broadly through the United States, robotaxis, much sooner than we would have had this administration not been elected.
Cathie, you look at Tesla, though, the move here is incredible. I mean, we're up about 30%, Cathie, in just the past month. Is that because you just think Tesla investors say, hey, you know what, our guy, our CEO, now has, the president-elect on speed dial? Is it justified to you, Cathie?
I don't think that's the reason. I think what happened with Cybercab Day a few weeks ago forced, and Tesla's recent earnings report, forced analysts into considering what will autonomous mean to this business model. And an autonomous taxi network is a SaaS model. A SaaS model.
But Cathie, but the stock didn't go up on the cyber event, right? It did go up in the earnings, but it went up on the earnings because they're selling more cars and making money on the cars. And those aren't autonomous cars. They're still cars that you got to sit in.
Well, it takes analysts a little while, and I know if they witness what happened at Cybercab Day, which was really a product announcement, but which was detailed for financial analysts more in the earnings report. Once they start doing these models and realize, wait a minute, this is not just a car manufacturer with EV margins, electric vehicle margins in the, let's just say 20 to 30% range over time. Right? They're lower than that now. This is a software as a service model with gross margins not at 20 to 30%, but 80 to 90%. It's a completely different model. And what's been interesting is Waymo, Alphabet's Waymo, has proof of concept. Autonomous is not about tomorrow, it's here. And we're very excited to see how Tesla is going to go to market.
I want to switch gears a little bit, Cathie, and talk a little bit about performance, which we've discussed before. And if you look, we always talk about how you focus on the long term. And yet, as we've pointed out, if you look over the past 3 to 5 to 10 year periods, what have you, for the ARK Innovation Fund, you would have done better in many cases by just putting your money in the S&P 500. What are you communicating to investors at this point who might have doubts about the sustainability of this strategy that hasn't necessarily paid off for them?
Yes. Okay. So let's just, I just want to give you perspective. So since inception, our compound annual rate of return is about 11% for the flagship strategy, sub the 15% that is our goal. But we never dreamed that we would face the headwinds that we have in these last 4 years with interest rates, shocking the system and so forth. If you look at our strategy this year, it's up maybe mid-single digits now. However, you have to decompose it into a number of areas. If you look at part of our flagship strategy is incorporated in ARKW. ARKW this year is beating the market, and especially after today, probably beating all the broad-based benchmarks. If you look at ARKG, which has been the most disadvantaged by policies during the last 4 years. That strategy has gone down roughly 20% this year. We think that that is going to change dramatically now that we have an administration focused on healthcare. And I love they're going to root out corruption. These are the three mandates they feel they have. Root out corruption. What is corruption? It's not as deliberate as that, but you've got huge lobbying organizations advocating for the status quo when there is so much innovation that is going to introduce preventative medicine, predictive medicine, personalized medicine, and participatory medicine. Is going to transform healthcare directly. I mean, entirely. One of the most important things they've said in terms of changing healthcare is they want to reintroduce the rich tradition of the gold standard of evidence-based science, bringing real science into healthcare decision-making. That has not happened in a long while, and especially because our companies have been so disadvantaged. But the convergence among different sequencing technologies, DNA, RNA, protein, others, and artificial intelligence and CRISPR gene editing is already curing disease. This is not an if or a when. It is now. CRISPR Therapeutics is now. CRISPR has been pummeled in this market. It's been cut in half this year, even though it has 2 therapies that have been approved in US, UK, and Europe to cure sickle cell disease and beta thalassemia. Analysts don't think that cures should be worth very much. They much prefer status quo of chronic disease and an annuity where you have to take medicine daily in order to support these business models. That is going to change. And we couldn't be more excited about it. And this focus on changing the paradigm from sick care, which is what we have now, and why healthcare is 20% of our GDP, to healthcare. It is very interesting that prescription drugs today are 10% of the healthcare budget. That 90%, a lot of it, I'm going to say 75% of that, 90% is for sick care. If we are curing diseases, and I think we're going to cure more and more diseases over time, CRISPR is working on type 1 and type 2 diabetes, for example. A lot of that sick care is going to go away, and more can go to these therapies, which deserve the prices they're getting because they're curing disease. And we have written a piece recently, it's on our site, about what a patent associated with a cure is going to be worth compared to patents associated with traditional medications. And we believe they will be worth 2 to 20 times more, depending on the indication. That is not what traditional healthcare analysts think. They're not even thinking about it. Well, they're just going with the status quo, which is going to change under this administration.
We shall see, Cathie, and we'll check back in with you. Thanks so much for your time.
It's very exciting. It's very hopeful. It's very good.
Well, the market's hopeful, that's for sure. All right, thanks a lot, Cathie. Appreciate it.
All right, thanks so much.